Home sales have to fall if the real estate industry wants to be doing more sales, according to a recent report from BMO. I'm going to talk about this today, and I'm also going to cover the most recent statistics from the Canadian Real Estate Association. So, the Canadian real estate industry has found itself in a bit of a trap. The housing market is seeing a little bit of increases in sales. Sales are up 3.8% month over month, and we're up about 6.6% when compared to the number of homes that sold in July of last year versus the number of homes that sold in July of this year. But the true story on this lies beneath the surface, and that is that prices remain soft. So you hear a lot of headlines, you hear a lot of people in the real estate industry talk about how real estate is up. But the reality is it's that home sales are up, and home sales are up because house prices are falling. And so it's house prices falling, this renewed affordability that is bringing buyers back into the market. It's not a renewed bullishness or hope or optimism towards rate cuts. As house prices fall, more people can afford them and more buyers will transact on properties, meaning more transactions get done. So let's just quickly cover the key stats from the Canadian Real Estate Association's new listings up slightly by 10 basis points on a month over month basis. The sales to new listings ratio is up to 52%, which is up from 50%, in June. And we're approaching the long-term average of around 55%. Months of inventory is down to 4.4 months, slightly higher than the 5-month norm. Still not a seller's market. That would leave us in balanced market territory. And the MLS home price index is flat from June to July, and we're down still about 3.5% year over year. And you can see, as I've mentioned a handful of times on the show, that house prices are continuing to grind sideways and grind down ever so slightly. And the Canadian Real Estate Association emphasized that they're expecting a fall market surge, and this year that it seems to be buyers returning more to the market, not just new listings. Contrary to a lot of the bullish narratives based on rate easing or pent-up demand in the real estate industry, I really think that it's the drop in prices sustained since early 2025 that is improving for affordability and reigniting interest among buyers. And let me show you why. A lot of people think it's the rate cuts that are doing it, but falling prices are actually equally, if not more powerful at restoring affordability than rate cuts. So if we look at a 5% price drop on the average Canadian home, a $700,000 house, 20% down, 25-year amortization, 5% interest rate, a 5% drop in price would save you roughly $165 a month on your mortgage payment. So falling prices gets you a lot further than a 25 basis point rate cut. So dropping from 5% to 4.75% on the same home, which only saves you $58 per month. So a comparable drop in prices to interest rates, a 25 basis point drop in a 5% interest rate is a 5% drop in your interest. So 5% change in interest only gives you $58 a month saving. 5% drop in price gives you $165 a month saving. So price drops will bring buyers back to the market faster than rate cuts. And this is why BMO recently came out and said, and this is an article from Better Dwelling, that Canadian home sales will stay weak until prices drop, either voluntarily or forced by the market. Now, CREA also put out their forecast, and they have some cautious optimism still. They did trim their 2025 forecast. Expected total home sales is now down 3%, and their projection for average price is that it'll fall 1.7% to $677,000. So why do price drops matter more than rate cuts? Well, the first one is the immediate impact. Lower prices shrink the loan amount outright, whereas rate cuts only marginally reduce interest costs. With rates in a higher for longer environment, shrinking payments via price relief is what fuels buyer confidence, not speculative optimism from rate cuts. Now I'm going to go through a couple of regional highlights. I took the Canadian Real Estate Association's price change tables from their stats release, and I found that Calgary actually joined Toronto and Vancouver as the major cities that have actually seen falling prices year over year. So even though on a national average house prices are falling, they're falling because Vancouver and Toronto have so much activity and such high prices that they can pull down the national average. Calgary has now joined the ranks among those two cities to see prices falling on a year over year basis. If you look at the 5-year, Toronto actually has the lowest price growth, growing 15% since 2020. And New Brunswick has the highest, growing 80% since 2020. And if we look at the 3-year context, Toronto has seen the biggest 3-year loss in house prices in Canada among major markets. Toronto, Greater Vancouver, Victoria, and Ottawa have all seen declines on a 3-year timeline in house prices, with Toronto down 11.6% in the last 3 years. So my question for you is, do you think that some of these other cities will join the list of cities that have actually seen value drops on a year over year or even on a 3-year basis? A lot of people, especially on social media, talk about how the market's going to crash and it's going to spread and we're going to see losses in a lot of these other cities. But it seems like in cities where people can afford to buy houses, they're not really seeing a lot of downward pressure on prices. Do I think that they could? Probably. And the reason why, we're going to enter into a recession. We're already in the first quarter of the 2 quarters that we need to see falling GDP to qualify for a technical recession. We're seeing job losses across the board. We're seeing layoffs. We're seeing return to office. So a lot of people who spread out of bigger cores like Toronto to go to these secondary markets might actually have to come back. And we're also facing the infamous renewal wall, which could push more and more distressed supply into the market, making the market more and more in favor of buyers. Could it reduce prices in some of those other markets? Absolutely. And I think that that's probably going to be the trend, which is why Korea's adjusted their forecast for prices to fall over the next year. But I'm curious to get your take. Let me know what you think in the comments and let's have a chat about it. Thanks a lot for taking the time to watch this video. Try to keep this one short for you. I'll be back very soon to talk about some drama in the real estate market around real estate brokerage closing and a class action lawsuit that just saw its first settlement from the real estate industry.